Welcome back, everybody. This is Wild Digital C Conference 2021, Session 10. Our topic is Revolutionizing Fintech. Is embedded finance the future? The era of embedded finance is here to stay. With an estimated market value of 3 billion USD by 2030, it's clear that it's not just a financial fad, it's the future. Listen in as our panelists discuss the current trends, future growth, and potential opportunities of this new financial service in Southeast Asia. Our panel includes these speakers. We've got Mohandass, Kalaichelvan, co-founder and CEO of Spendmo, Chee Foong, co-founder and CTO of MoneyLion, Andrea, co-founder and CEO of Aspire, and Varun, the moderator who is the author in Singapore of the Fintech Nation. Gentlemen, the floor is all yours.
Thank you, everyone, for joining today. I'm Varun. I'm author of Singapore Fintech Nation, the history of how Singapore became a fintech hub. And I'm very happy to welcome several friends here and some new friends to come in and introduce a bit about them and their company and how they are be part of the embedded finance revolution before we jump into the further questions. Andrea, if I could start with you.
Thanks so much, Varun. For a quick intro, Andrea here. I'm the co-founder and CEO of Aspire. We are a B2B fintech platform with the mission of reinventing business banking. So a really ambitious mission. We are offering an all-in-one finance stack that helps businesses across the life cycle, from a very beginning when they're born till when they're grown up. And our services include several tools to help them along the way.
Chee.
Hi, my name is Chee. I'm the co-founder and CTO of MoneyLion. MoneyLion is a consumer finance app. We started the company with the mission of bringing the forefront of technology and artificial intelligence to the consumer finance industry. Our main mission is to bring the private banking functionality to the hardworking middle class. Right now, we are headquartered in New York City and have a tech hub in Kuala Lumpur. We are currently only focusing in the US market, but we have ambition to expand to Southeast Asia.
Mohan?
Hey guys, super excited to be here. My name is Mohandass. I'm the CEO and co-founder of Spenmo. Spenmo is the market-leading payment software for growing businesses that brings spend management, corporate cards, and automated bill pay into an integrated view. Prior to starting Spendmill about 2.5 years ago, I actually started my career as a BCG management consultant and had the luxury of being part of a Grab team that hopefully is speccing very soon. So excited to be here.
Perfect. Now that you talked about SPAC, and we see a lot of neobanks talking about embedded finance, and Human has seen a journey from a different side. Do the neobanks actually need a license or a proper banking license, or that license is a more liability? And Human, if I could start from you, because you could give a comparison on the American landscape where to rent a license is much, much easier, and renting one license gives you 300 million people market, versus Southeast Asia, you need to find a lot of friends instead of 1 or 2 friends. If I could start from you, Human, do you need a license actually, or renting is good enough?
That's a very good question, and obviously, if you look around, there are only a handful of fintech that have the license. So and as we can see from the experience, when they get their license, it does seem that it slows down innovation a little bit. So from my standpoint is that there is no questions that the license. I think it's just like the Spider-Man quote. When it comes when you have the power, it comes with big responsibility. So to me, if it's possible in the US, we will continue be renting the licenses using the host bank model, but in potentially locality that do not have such mechanism, I would say a banking license might not be a bad idea.
Okay, absolutely, makes sense. And Andrea, if you could share from the Asian context?
I'm happy to share, and just to echo a bit Chinman type of inputs. I totally agree. We've seen different approaches, right? So my personal view is that at least at the start, right, of a company, a banking license does not really marry well with a startup, given the cost and complexity. And globally, we've seen a lot of successful neobanks running on payment licenses, for example, right? Of course, there are exceptions. We've seen couple, for example, Monzo, I think, that started with the banking license from the get going. From an Asian perspective, I think it's pretty much similar. Again, early stage probably wouldn't be my recommendation. But as the company expand and as the fintech expand, there might be opportunities to go a bit more mainstream. So that's a bit what I've seen from this part of the world.
Mohan?
Yeah, I mean, if I could just echo what both these guys have said, I think, the way kind of like startups operate, I think license is almost a luxury that they can't afford because you have to like move fast and break things. And getting a license from one of these regulators is not a move fast and break thing kind of concept. It's a long kind of journey, which is why, in Spenmo's context at least, we kind of focus on building software embedded with fintechy elements like card issuing and bill pay, where we work with licensed partners. So almost you see this business model where companies, the bigger companies that are basically doing this banking as a service, or almost what I see them as license as a service, right? Which allows companies like us to focus on the software element and rely on partners who have done the hard work on compliance and on the licensing bits. So I think at least in the Spendmill context, like we want to be very license-like because focus is on software-led capabilities, and wherever we can, we partner with licensed partners, right? And it's something that's kind of supported us all the way to like Series A now. And if I kind of look 5 years ahead into a crystal ball, maybe there's an opportunity for us to kind of do it on our own, but definitely not early on. So I think it's like, I think what Andrea and Chee have kind of mentioned is really the staging of the journey. You want to focus on your value proposition that only you can build, right? That a licensed player can't build, right? The focus is not there. Partner with them. And over time, you will do the cost benefit analysis of like, hey, maybe I should kind of do this on my own.
Got it. Absolutely makes sense. And if you look at, you mentioned that incumbents cannot do. So usually one conundrum is that would the banks learn tech before tech learns banking from that perspective? So is it just the focus or is it the DNA? Because what exactly is it? Because the traditional financial institutions, at least they have money of all things, if nothing, not much. So why would you say that they cannot do? Is what stops them?
Yeah, I can start. I think Varun, was it me? Should I kind of get the ball rolling on this one?
Please.
Yeah. So I think for context, in my last job with Grab, the last thing I left working on was the digital banking application. So I kind of seen the whole process and how painful it is. And I think I wouldn't go and say like a bank will never be able to do it, but I think historically a bank has never built great software, right? And I think one of the things that we found is just like number one is like compliance driven. They're not looking to break things. People want to bank with you as an institution because you're stable, not because you're like innovating massively, right? Maybe now it's changing, right? Consumers are looking for more things, right? Not just to park their money and get like sub 1% interest per year. But I think just the mindset of like, hey, let's keep the house safe. Let's not innovate too much. That's historically been what banks have done. And obviously, I don't speak broadly. There's obviously the DBSs of the world, right, which have done really, really well. But DBS is not emblematic of like the Southeast Asia banking scene, right? There's tons of like second tier, mid tier community banks that are not looking to do anything innovative. And I think they will definitely not be looking to build software, right? Like software for companies on the B2B side, like what we're building. So I think that's the whole context there. I think the mindset, the way they kind of set up is not geared towards innovation, right? Which is why like I think guys like, obviously like Andrea and Aspire will have a chance to do something great.
No, absolutely. And Andrea, what do you think the banks cannot do?
Maybe I start with a short story, right? I was having a catch an executive, like let's say extremely smart executive. I don't mention any names, I don't mention any industry, but let's assume financial industry. And I pull up my our application just to show the application, and this person asked me how much is up, right? And I thought, okay, that's an interesting question because the app is our company. So it's not exactly something that I know how much it cost. And so I said, I don't know exactly how much it cost because we kind of built it. We were every day, right? So that's actually the company. And I think if you think about that in that way, you kind of understand the issue, right? And the issue is, I mean, for the consumer perspective, is that there is a lot of expertise in the business sense that has not sort of captured the complexity of software and what it means. And the software is not something that you build. That you buy, right, and implement. It's something that you breathe every day. You constantly build on weekly by weekly cycles, and that's for me the key piece that is sort of allowing fintechs to grow.
And the part which you're saying is, for them, the bankers are just looking at it as a channel. They're not looking at it as a company.
Yeah, it's a I would say it's a channel that you implement and it's done. And for the fintechs is the company itself is there.
And Chimun, you see a lot of those in the US. How do you see that? Do you expect the so-called Big Five, Big Four to learn tech first with thousands of engineers at disposal?
Obviously, in the US, if you look at the JP Morgan of the world, Citibank of the world, they have a tech budget that I think easily outnumber the valuation of all of the three companies plus together, maybe times 5. So if anything, they have the money. To me, is the biggest difference, and this is emblematic to what Silicon Valley stands for is the culture. I think for us, the software company, we have the culture of innovation because that's what we do. We have the culture of engineering and we have the culture of innovation. And that is something that is very hard to be built from ground up, especially from a very big bank that has been running for like 50 to 80 years. So that is, I think that is the major downfall. And then the other thing is the customer centricity. I think I think necessity is the mother of all innovations, and being able to focus on the customer needs most entirely allow you to innovate faster, experiment faster, and push out product faster. And much more importantly is that we live and breathe this kind of culture along with other consumer technology companies such as Airbnb, such as Uber and whatnot. So and Grab, for example, right? So I think that's how a lot of fintech are able to leapfrog from most banks.
Absolutely, that makes absolute sense from that perspective. But now, if I look at the sense on that, there is a race, and one of the lines I was reading was some of these fintech neobanks are now worth more than the top names which you mentioned. So, do you expect that to happen in Southeast Asia as well? And I will start that you, Chimun, first. If you were to pick out 3 to 4 of these neobanks from Southeast Asia, which you believe would go IPO first, who would those be? Because you are insider and outsider both. I won't ask you about yours, but what's your view on others?
Obviously, the first one that will go to me, that will go public, it will definitely be Grab, because I don't know if they will go public first or they will have the bank first is a problem, right? But they will definitely be the first.
The thing is, see, I don't usually count them as neobanks because that's a small part of a very large business. So which are the like pure FS financial service neobanks you think which will go IPO from Southeast Asia? The conglomerates where this is one of the unit is not a pure neobank. It's one business of 10 of theirs.
Right. Strictly from fintech standpoint, there are a I'm gonna just tell you the company that I like rather than company that will go public.
No, absolutely.
I like companies like BigPay and company like TNG Digital that I think are innovating very well. And I won't tell you there are a few companies that I don't like. And I like companies such as Spenmo and Aspire. I will say that even without them in the room. So and I think they are extremely innovative, and I think these guys are good.
And Andrea, what would be your wish list other than yours? Yours, of course, will be in your list. Same for Mohan. What will be the ones other than you? The top 4 neo banks which are doing embedded finance players to go public from Southeast Asia. Andreas, first you.
I was actually thinking I don't have a lot of names on my list, and frankly, I think that the space is not developed enough to have a serious guess at the moment. I definitely know few, for example, BigPay that Chee mentioned, but I cannot really mention that many more. So probably if you ask me the question in 1 year or so, I'm able to at least have a list. And what comes more to mind is definitely potentially early stage. So I know a company, for example, that is doing a similar business model for teenagers called Get, which looks quite promising. And I know a few other players that are into some segmentation. So they are trying to address special verticals, but I would say the landscape is extremely early stage. And not to say that an IPO cannot happen within a few years from a seed round, but what I see is definitely an early stage industry with a lot of potential, but still extremely early stage compared to Europe and US.
Perfect. And Mohan, what do you think?
Oh, for me, I mean, I think Chee has kind of mentioned a few names. I think for me, the big one, I think maybe a bit biased because I spent a year abroad in Philippines working there. Definitely like the globe telecom space, and I think GCash will be big. GCash, I think they built for the hard. They have a really, really good consumer product, and Philippines is the kind of country where you cannot, even as a big bank, you possibly cannot cover 7,000 islands, right? It's just crazy number of islands that you have to do if you want to do branch banking. So branchless banking done via a GCash app, where majority of blue collar Filipinos actually get their salaries even today via GCash. I think they have the opportunity to do something really, really big. So now they're just doing payouts and topping up wallet, but I don't think it's very far away from them becoming a proper full-fledged consumer bank. And I think they'll do a really good job.
Absolutely, that makes
also because if you can't think about it, because just of the telco distribution as well, right?
No, absolutely.
Telco distribution plus a great consumer banking product, I think is a recipe for success.
And specifically in a country where still 50% people don't have bank accounts.
Yeah.
So perfect. And if I were to move to the other part, COVID has created a lot of, I would say, additional use cases, business behaviors for embedded finance. What are the couple of behaviors you see which were caused by COVID but will stick around? Of course, some will go back. People are starting to gonna go travel. That will go back. But stuff which will not go back. So, Mohan, if I were to start from you, what are those kind of behaviors which you think for embedded finance are never gonna go back?
Yeah, I think that's a great question. I think it's something that kind of defined why we are alive and why we're kind of thriving during this time as well. So I don't think COVID has been entirely bad for us. So we hope that people don't change their behaviors overnight. But I think one of the things that was kind of evident when we started Spendmo in 2019, is, kind of juxtaposing US B2B customers versus Asian B2B customers. I think the US, what we found when we talked to some of the companies was that they would basically, pay an inordinate amount of money to save 1 hour of time, while in Asia it was flipped. They would spend inordinate amount of time to save $1 of paying for something. And I think that has kind of changed. Now people realize that, hey, if I have a 50-man finance team that's kind of doing a lot of manual stuff like accounts payable, admin assistants, they kind of realize now, hey, I don't have so many people on my payroll, right? Because certain things that I can automate, I should. Because number one, when I ask CFOs, why do you want to shrink the team? Basically, hey, if software can do it, people, software doesn't fall sick, software doesn't take leave, and software doesn't make mistakes. So I think something that we found where like over time, companies that I spoke to in 2019 and re-engaged them, they're really actively looking for software to make their workforce a lot more productive, right? So I think now, one of the things that within COVID is just like CFO stack has been the final kind of frontier in this part of the world, right? So you kind of see your accounting going into the cloud, your AR and your payment gateways are there. And the final kind of piece of the puzzle for us is the AP piece, right? Which has traditionally been done in like silos in Excel or like, proprietary kind of on-premise built software that doesn't scale well. So I think we do expect that to kind of stay, that, people are not going to suddenly go and hire like 50 more like, intensive finance assistants to do stuff that software should do. Obviously, I'm biased, right? So take it with a pinch of salt.
Andrea?
Just to build on top of more comment, I think I've seen a lot of behaviors around team management drastically changing, because the way at least we're focusing on businesses, right? And at least in businesses space, people has been used to let's say send their team around, right, to sign documents just to access some tools, right? And that changed a lot. So the whole concept of managing your team, managing your access levels, it's something that is going to be really hard to bring it back to a paperwork environment. When people realize that it's possible to just bring someone onto a tool just by clicking a button and sending something online, because it's much simpler. And it really it seems so obvious that, especially with remote working, people not being able to travel, people might be in quarantine, right, for weeks without the ability to go out. It's unthinkable to go back to a behavior where you need to send someone to a branch, to sign some paperwork. Otherwise, you cannot approve a transaction. So that for me is a key to understand again how both CFOs and financial teams are thinking about their financial stack.
Chee?
I do agree with Andrea and Mohan, is that COVID, the whole experience of it is actually an accelerant of the more secular progress that we saw from before. We know for a fact that almost any financial institution before COVID were trying out like digital KYC and whatnot. And I think COVID just accelerate that kind of effort going forward, and definitely automation as well, because it's harder to hire when everyone is remote, and it's hard to get everyone to work. So remote workforce management obviously is something that has progressed significantly during the COVID time, but I think so as the automation part of it. Moneyline, fortunately, is one of the benefactor of this kind of progress. When we first started, we used augmented intelligence, where we have AI scores that inform human underwriter to approve loans. But as we go, we have like the top 20% being automatically underwritten using AI, and we constantly reduce to 20%. So at the height of it, we have 60-person workforce of human underwriter. Now we have 0, and you can see how this kind of COVID situation actually having 0 human underwriter workforce actually benefited significantly.
Wow. So technically, one way to look at this is people in the financial banks would be like, you guys are destroying jobs.
That kind of job we destroyed 100% of it within Moneyline, unfortunately.
No, absolutely makes sense. The other part I wanted to catch in was in terms of the revenue models, because a lot of these are venture funded. So where do you think is the right balance in terms of profitability and sustainability? Because some of the traditional financial players' view is that a lot of embedded finance players are quite far off from unit economics. So where do you see like the role of unit economics? Because a lot of this is investor funded with future growth outlook from that perspective. So where do you see is, I would say, in terms of prioritization and the bandwidth spent on looking at unit economics per se? And if I could start from you, Chimun, because you probably spend most time on unit economics with a listed company.
So I guess it depends on the arc where you are on the arc of the company, and when you are really small, obviously you might not even talk about unit economy. You talk about more. You worry more about product market fit. And so as you go, when you find certain product market fit for one or two of your products, and it's when you scale it, then is the trade-off between your marketing dollar versus your churn, right? So when you are listed like us, then you really have to worry about unit economy. If your unit economy is per users, is it dropping? If it's dropping, then do you develop like accessory products in order to expand the revenue? And even at our stage, you still have to grow at a much more significant. In fact, you will have to grow a lot more significantly than before, simply because after you have gone public, you have whole bunch of cash in your bank. So that becomes extremely important. But I do think that, especially in financial service, it is possible to turn positive unit economy, and especially after you find product market fit.
Perfect. And Andrea, where do you think, what is the right time for unit economics to start to trickle in and becoming one of the key drivers?
I think it's a timing topic. Frankly, I spent before fintech, I spent a long time into consumer marketplace platform, and I can tell you that is where I learned what bad unit economics means. I think frankly, these businesses are obviously not profitable as platforms, right? They are platforms that need to rely on advertising and other tools. If you look at that kind of world, when you move to finance and fintech, my perspective is that it's a timing topic. It's not a business model topic. So we will not have to rely on other streams, to be profitable. It's just a matter of when someone wants to focus there. And for me, it's product market fit, then a bunch of scale. And scale can mean a lot of things for a lot of people. Depends a bit on are you looking at consumer, are you looking at business clients? But when that happens, I don't think anybody in fintech will have a problem to figure out the unit economics margins.
And Mohan?
Yeah, I mean, just kind of like adding on to Andrea's point. Obviously, at Grab, we spoke about unit economics a lot, and you guys will know what the unit economics look like, even as we try to list the company, right? So
I love the vouchers. I focus on vouchers.
Yeah, you're one of those guys who takes the food voucher and never comes back, right? So it's bad unit economics for us. And again, I think that's why, I think maybe some of the banks in the future will not even have banking as their core product, right? Because some of these guys, you can imagine like a DoorDash equivalent or like Uber equivalent. They have the distribution, they have the consumers, and for them it's adding like a bank on the side, right? To kind of say, hey, we have all these users, they're sticky. We kind of know their patterns, right, on how they do these things. Let us kind of offer financial services that. So I think that will be very tricky for like a traditional pure play neobank to kind of compete, because again, distribution is done, right? And I think we live in a world where like distribution trumps even product sometimes. So that's going to be tricky, and it's going to be up to like the neobanks that are pure play to kind of see, how they can beat that distribution, build a better product, and kind of like solve unit economics in time. But I think it's also in the next 12 to 18 months, at least when I speak to VCs, nobody kind of sees the capital markets party kind of ending anytime soon, which basically gives companies the ability to kind of raise a bit more money, get a bit more gas in the tank, and kind of build acquisition, right? Because I think for a bank kind of play, you want to acquire as many users as you can, show that, cohort analysis, the cohort growth over time. And unit economics eventually like the end game for a lot of these players, whether you're doing a DoorDash, Grab type model or like a pure player, neobank kind of model, end of the day is credit, right? Like credit is the way that all these guys are going to monetize and like show profitability, right? Because I don't see any of the neobanks ever going to say, hey, pay 10 euros a month, $10 a month to kind of use us. Eventually it will all be free and the monetization will come from like credit and like lending and potentially like other revenue sources as well. I think that's how I kind of see it playing out.
So, and that's very interesting because, like I would say 80, probably 90% of the neobanks revenue model is credit. So like, is credit that holy grail from that perspective? Because there are outliers who may not say credit, but 95% is credit. So do you see that the real opportunity of embedded finance is about enabling credit per se, or do you see other use cases with significant dollar opportunity behind them? Mohan, if I was to start from you.
Yeah, I can start first. And yeah, I think definitely credit is going to be the big one. I think it's something that people have said, like, if I know enough about this consumer or this company, I'm going to be able to effectively credit score them. And Southeast Asia is like a no-brainer for that, right? The credit gap is huge. Like what people and companies want to borrow versus like what banks are giving out. It's like a massive discrepancy. I'm not going to quote any numbers because I just know it's big. I don't know the exact number, but the credit gap exists, right? So we know that's going to be a big problem and people are going to tackle it first. Question is like who can build the data science and the AI to kind of effectively credit score at scale, right? To a point where it's profitable, right? And I think the second part is like once you've kind of done the credit piece, other revenue sources potentially, I would say, will probably come from like wealth management, right? Like you do a pure play neobank, after lending the guy, financing him, the next step will be kind of like to grow his wealth and to take a cut of growing that wealth, right? I assume like that's the next play. But I'm pretty sure Andrea and like Chee will have other ideas as well.
Andrea?
Pretty bullish on credit being the driver eventually on a lot of let's call it payment models or neobanking models. I think FX is potentially a second piece, and this is just to add a few thoughts. Definitely wealth. Although wealth margins, I would say probably less juicy than the previous two I mentioned from what I've seen. That's just my opinion.
And Chee?
In my company, we sort of like live in the juncture of lifestyle and finance. So obviously, like what Andrea and Mohan said, there are two sides of the coin that's extremely important. There's no question about it, which is the liability and the assets part, right? So in the history of mankind, all banks make most of their money from either credit and some money from the asset management. But as we can see from some of the companies in the US, such as Robinhood and whatnot, wealth management, or in that particular case, is to provide access for investment, can be an extremely lucrative of a business models as well. And it's essentially the business model that MoneyLion is pursuing as well. And when you are able to provide a holistic solutions to everything, like I say, what we are trying to do is to provide private banking functionalities to middle Americans. What that most of our users will be able to pay like a membership fees kind of stuff, so which will allow like a third revenue vectors.
Awesome. And as we wrap up, what would be your one final prediction for what do you think will be the biggest influence for embedded finance for 2022? Shimon, if I start from you on that.
I think embedded finance is at its very nascent stage. I think similar to how AWS affect the tech industry, it is gonna bring democratize a lot of financial services functionality to a lot of startups, which means that the overall quality of startup will be much better. as we can observe from Silicon Valley's startup, there's an inflation in Series A funding, simply because the quality of the startup becomes much higher. You don't have to pay attention to managing servers. So similarly, with embedded finance, you don't have to pay attention to actually acquiring a lending license and whatnot. So I think I'm very bullish. I think that the embedded finance industry will be multiple times bigger than the banking industry itself.
Perfect. And Mohan?
Yeah. Hey, so I was thinking about it, right? I think the one that I'm kind of looking forward to 2022 is that now like any single company that has like serious networks and distribution and a set of customers can potentially have ambition to become a bank, right? I think that's very exciting because overall, I think there'll be like a lot of smarter minds, guys who move faster, willing to break things, who will take a crack at solving this overall banking problem, right? I think, 10 years ago, like if nobody was thinking of like, hey, I could build a bank on the side. It was a serious endeavor, like for guys with like seriously deep pockets and traditional capitalists. But now with all this banking as a service players, license as a service players, you're going to see a lot more companies that have like a decent set of customers say like, hey, I have like 1 million customers that are active every month. I could offer them some financial services. So I think over time, consumers are going to have the ability to kind of say, hey, I have like almost like 7 pseudo bank accounts at 7 different companies that I, like products that I use. Now it's time for me to pick and have my, ability to kind of pick the best product, right? So I think overall consumer experience, I think consumer will win in this one. So I'm pretty excited for that.
And Andreas, what's your last parting wish list for 2022?
I'm quite excited about anything that that connects software and usability, especially for businesses. You can think about receivable management, team management, and approval management, spend management. Anything like that connect to payment services and the connectivity between the user experience and the payment network. For me, is going to be quite exciting in 2022.
Thank you so much. Thank you guys for your time and sharing such wonderful insights. Thank you, everybody.
Thank you, guys. Thank you, Varun.
Thanks, everyone.
Thank you.